Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today we again will take a look at the New Zealand dollar and probably will lead our story right to the final because although yesterday we see that the downward action on the New Zealand dollar has continued, but the pattern that stands on the daily chart is still valid, and although theoretical invalidation point of this pattern stands at its low, but probably its destiny will be resolved a bit earlier. And market right now stands at the point where this should happen. That's why currently New Zealand dollar stands in an area that will be the major area that should resolve and impact on the short-term perspective of the New Zealand dollar. So if market will hold here, then the chances on some upward ABCD will hold. If market will fail, in this case probably this pattern also will fail and market could continue move lower as on the daily time frame chart as on the weekly time frame chart. And it's obviously that Fed Reserve and the statement from the Fed probably will be the dominate in the resolving of this riddle. Meantime, our major picture stands on the hourly chart. So that is the action how it develops on the New Zealand dollar. Recall what we have said initially. Initially we said that we have the thrust up, ABCD retracement, and we could try to take the long position because market has formed multiple bullish stop grabbers. Market was at the 3.50% support here, and we sense that this is some sort of the guarded 222 buy pattern. We could try to take the long position. Yesterday, when the market stands in this upward action, we said move your stops to the break even, because if market will fail here, you will lose nothing. That's just how we usually prefer to trade these setups. Our normal approach for taking the positions to having some support area on our back. In our case, in this case, that was the fib level. Why we usually are trying to take positions on the fib levels or better these agreements or confluence supports? Mostly because these areas have enough power to force market to show at least minor bounce. And this bounce not necessarily is the sign of starting upward trend. That could be just the tactical bounce of the touching the first supports, just how market usually works. But this bounce lets us to move our stop to the break even when it stands on the road. So when bounce is happening, we're moving our stop to the break even, because if this will be the real upward action, market should not return back down. Okay, and our stops relatively safe. But if this will happen, the market will return it back down, taking out with the stops. This will give us two advantages. First of all, we understand that this not the upward action yet, and the market return right back down. And second, we understand it's for free, because we do not lose anything when the market return back down here and taking our stops. That is what we usually do, and how we call you to trade and where to take the positions. So that's approximately was the same situation, and we have talked about this yesterday. So right now, as we said, market stands at the crucial area, the final point, because as you can see, market right now is showing the same ABCD retracement after initial thrust, but this ABCD retracement a bit larger scale than initial ABCD, and now market is approaching to the major support area. So that is the 618 support of this thrusting action, and in fact that is the already deep retracement inside of the body of this pattern of this morning star right at the daily reversal. So and that's in fact the last barrier for the market, the edge if market will hold here, in this case we could count on some A, B, C bottom, D pattern. But in this case, our target will stand approximately at the previous tops, because you can see market has reached the 618 support, and the 618 extension will lead us right to the previous top. So it's approximately 74.35. If market will fail here, continue move lower, it will significantly increase the chance that this pattern will fail and market will just continue move lower. Because take a look that this area is also monthly pivot support one, 70-90. 70-90, it's right here. So that's why, and probably the Fed will be the determining factor, the major factor that will clarify whether this bounce up will happen or not. That situation of the short-term perspective of the New Zealand dollar will be probably resolved today. But pure technical moment shows that this really could be the, as you can see, this regardless 222 buy pattern. Okay, but this probably will be the last chance for the bulls here to show any upward action, upward retracement. So let's see what will happen. But in this case, before to taking the long position here, it's better to wait for reversal patterns on intraday charts. Maybe on the 15-minute chart, this market will form something here, some bullish reversal patterns. In this case, you could try to do this. But right now, it's better to not just take blindly the position just because the market stands at this support. It's better to wait for something. So that's all that we could say right now on the New Zealand dollar, and this story probably gradually is coming to an end. I mean, with this possible upward retracement in the short-term perspective on the New Zealand dollar, and soon we probably will need to wait to search for something else here for trading, maybe not even on the New Zealand dollar. So anyway, today is the special event, so Fed meeting and press conference. Let's see what will happen here.